Thousands upon thousands of investors bought GNUS stock, ticker symbol GNUS, the last few trading days as the stock essentially strapped on its boosters and was headed for the moon. And this morning started off strong, but then the stock took a sharp U-turn and dropped over 40% within an hour of trading after a few halts. This is quite a roller coaster ride for anyone holding this stock, and many investors are actually bailing out now at these levels, some with big gains, many with big losses. But why is GNUS stock crashing here today? Why is the stock down here today with all of the good news expected around this business? That's exactly what I want to discuss with you guys today. There were two things that came out that actually sent the stock on a volatile downward run here. I want to discuss with you and give you my thoughts on that. And then I also want to discuss some general movements that I see with these kinds of businesses and these kind of stocks. I think it's going to be a pretty interesting video for you guys. And if you appreciate it, all you have to do is hit that like button down below and share this video with at least one friend, because I know you guys know other people that are buying this stock right now. So I went to the company's investors relation page here on their website because I thought maybe there was some news that came out that is moving the stock so wildly. But after checking, I see that the last press release was issued in mid-May, which was almost a month ago. So clearly there wasn't any news posted from the company directly that moved this stock. So then it really got me thinking, and I figured there must be some news somewhere out there that hasn't been posted to their investors relation page yet, or there's some rumors floating around or other external factors that are moving the stock today. So naturally I went onto Twitter, and lo and behold, our favorite short selling firm, Citron Research, tweeted out something about GNUS, so let's take a look at it here. They tweeted, "GNUS to $1 fast. Consider this. The last 12 months, GNUS's revenue was $5 million, market cap is currently $800 million, and if you compare it to the leader in this space, WildBrain, which makes Teletubbies, they had the last 12 months revenue of $332 million and has a current market cap of $175 million. Not to mention the massive dilution at GNUS, which guys make note of here because this is something I will be discussing with you shortly." They then go on to say in a follow-up tweet, "OMG, just got corrected, 2 billion market cap for GNUS, what a complete joke. Cheap stock about to flood the market. This is child's play." And this, guys, is in reference to the huge 40% drop that the stock saw just about an hour or so after it opened on the trading day. And what I do want to pay attention to here is the quote, "cheap stock about to flood the market," because this is something I will be discussing here in a minute, and I'll explain what they mean by this. So initially when the stock opened, I guess it took investors a bit of time to digest this tweet that came out. They weren't really sure what to think of it, which is why the stock just continued moving higher on optimism. And then eventually there were some investors that figured, you know what, I don't really feel comfortable holding this anymore. Maybe there was some profit taking involved. So they started selling off their shares, started reevaluating their investments, and that really fed into the emotions of other investors, which led to the big sell-off that we saw throughout the day. So the second piece of news I want to discuss here that came out, again, not officially through the website, but from other news outlets, is in regards to that tweet that we just saw and that specific line from there that I told you guys I will be discussing. So there was an announcement, which again, I was surprised not to see this post on their website yet, but they will be going to sell more stock, which will further dilute shareholders. When there's more stock available, that's essentially flooding the market, which is what Citron Research posted in their tweet. In yesterday's video, one of my biggest concerns was the amount of shares that the company keeps issuing on a regular basis, and this has just given an image to investors that they are not a priority for the business, and they will keep diluting them on this run-up the stock is seeing. So in some reports that I'm seeing online, they will be offering around 60.1 million shares for sale by selling shareholders. This will be broken down into two parts. 31.1 million common shares and 29 million shares that can be issued if outstanding warrants are exercised at an exercise price of 21 cents a share. So just imagine the profits from that. These warrants were issued by the company back in March to what they call accredited investors in a private placement. And this just seems very sketchy here to me, because as a retail investor, you're going to ask yourself, who are these private investors in this company? Why do they get special treatment? Why did this issue happen just a couple of months before this big announcement? What is going on behind the scenes? There's a lot of unanswered questions, and this really makes me question the motives of the management team here, as they seem to have a me-first mentality where it's just the management team and pretty much everyone close to the management team that profits off the stock, while retail investors get the short end of the stick here, and in worst case could even be left bag holding the stock. So what does this all mean in simple terms, and why did this lead to the stock crashing here today? You see, a healthy business will be looking for opportunities to find their stock undervalued and then go ahead and buy back their stock. They typically make an announcement saying they will be buying X amount of shares throughout the year, and then consistently throughout the quarters following that, they buy back shares and take them off the market here, which increases shareholder value instantly. It's simple economics, guys. If there's less supply with the same amount of demand or even more demand out there, it just equals to more value. Many healthy companies out there do this, like, your big names, Starbucks, Apple, McDonald's, and the list just goes on and on. But then you have another tier of companies that are often referred to as pump and dumps. Is the stock running up on hype and FOMO? I think that after seeing a 2,400% run up here, that the question pretty much answers itself. But if you're not sure, the FOMO is real on this one. Does this stock give you the feeling that you can get rich from an upcoming event? Yeah, their launch of the new cartoon channel is the big news surrounding this company, which has got investors so excited. Does the company continue to dilute its shareholders? Yep, every time the stock sees a run up, the company doesn't hesitate to issue new shares and take advantage of this at the expense of shareholders. I mean, just look at their website here. In May, you can see that they were busy raising cash and diluting shareholders simultaneously, because I have a feeling that they know this pump that they're seeing in their stock price is not sustainable, but they want to cash in on this opportunity here while there's so much interest in the stock. And again, this is at the expense of existing shareholders. So I mean, I try to remain objective here, but if I had to pick whether this company fits into a healthy business or a pump and dump, I think the answer is pretty clear that this business is going through a pump and dump stage. There's no doubt that FOMO is real on this one, because in just the last week, guys, 105,000 new Robinhood investors bought into this stock on complete optimism and hype. But guess what's going to happen? At the first sign of any sort of fear, when the stock starts dropping massively once again, these investors are going to have weak hands, they're going to sell out of the stock, and they're going to cash in massive losses in most cases. I know a lot of you guys out there have already made your gains on the stock. What I would personally do is just kind of stop while I'm ahead here. You never really know what's going to happen. But if you did buy the stock at the peak here in the last day or so, you know that it's not a fun time to watch it drop 20, 30, 40% in a matter of minutes. Typically, this works as kind of a domino effect. The stock runs up huge, people start taking their profits, it starts causing some selling pressure, and then it adds a bit of fear because now the stock is dropping and other people start cashing out as well, and just keeps going and going and going. That's kind of the domino effect, and eventually fear takes over and people start panic selling. We saw this in the stock market, guys, the overall stock market back in March, when we saw massive drops in the overall index in massive blue chip companies. So typically when you see that, it is irrational and the market does correct over time. But when you have a stock that's just pumped up on pure optimism, on pure hype, it typically will revert to its true value at some point. So I want to show you some examples of stocks that you guys will all be familiar with that have gone through something very similar that GNUS is going through right now. So here's Virgin Galactic, ticker symbol SPCE, and this was such a hyped stock on so much hope, and the stock ran up from $10 to $40 in a matter of weeks, and then the selling started and we saw the dominoes fall. Now it sits much lower from its highs. We saw this also recently with NAT stock going from $3 to $9 in no time, and now the stock sits at around the $4 range after the hype and momentum has disappeared. And guys, we even saw this in a Chinese name. Remember iQIYI, or ticker symbol IQ, the Netflix of China? Yeah, they had a nice run up from $15 to nearly $50, and since then has trickled down and is now back to around the $15 range a couple of years later. I can go on and on with these examples of pump and dump stocks, but the point I'm trying to get across here is that yes, these stocks can run up on huge optimism. Yes, there is huge amounts of money to be made in these plays, but they are very risky, they are very volatile, and then eventually over time, these companies do come back to a more reasonable valuation. Remember, if you look at GNUS on a longer scale, you see that this is a little blip on their chart here. That's it. That's the recent run up that the stock has seen. And it's still a long ways off before it can get to anywhere near where it was just a few years ago. And if you ask me, with the amount of dilution that they've done, there's little to no chance that they're getting back there. Now, if you're an investor in GNUS, I'm sure that June 15th is a date that's engraved in your mind and you're waiting for it. But I can tell you guys just from the comments that I've seen on my previous video majority of retail investors are expecting the stock to pop on this day as well. But just keep in mind, the market typically does the opposite of what the majority believe, so I wouldn't be surprised to see the stock actually drop significantly on June 15th. It's going to take a few weeks, if not months, to see any progress from the cartoon channel release here in terms of numbers of people viewing, using it, all that kind of fun stuff. So you really have to be willing to hold the stock for at least a few months, in my opinion, if not a few quarters, to see any benefits from this, if any. Usually when you follow the herd, as they say, you're not going to get rich from that sort of investment. If it did work that way, guys, everyone would be rich from every play. But typically the majority lose out, and just a small portion of people who went against the grain are typically the ones who make millions. Also, just remember that just 1 month ago, this was a $10 million market cap company. And today, when the stock hit $11.50 per share, the company was valued over $1 billion. So it moved from a 10 million market cap to 1 billion market cap, and you tell me if this launch of Cartoon Channel justifies this sort of increase in value. But anyways, I'm going to continue monitoring the stock closely. I'll keep making videos for you guys if you want to see more content on this as more news progresses, because I know a lot of you guys are holding the stock right now. You know my stance on it. I'm staying far away from it. I'm just watching it for entertainment, really. But don't get me wrong, I do believe that there's a lot of money that can and has been made from this stock. But hopefully those gains have been cashed out by now, because we are seeing some volatility to the downside start to kick in here. But either way, what I want you guys to do now for me is just comment in the comment section down below. Let me know how you did with this trade, whether you made money on it, lost money on it, maybe you're holding the stock. Let me know. I'm sure a lot of you guys have had 100, 200, 300% gains on this. I'd love to hear your success stories in the comment section down below. Either way, guys, stay safe with this one. We don't really know what's happening. June 15th is the big date, so maybe I'll release another video around that time if we see more volatility kick into the stock again. But we'll have to wait and see what happens. But in the meantime, guys, thank you so much for watching, and don't forget to invest positively, and I'll see you in the next one.